Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I am thrilled that you're here. Now, I'm very excited about the interview I'm having today, mainly because of the age of this gentleman and what he's accomplished at that age. His name's Brian Wagers, and he's in 425 doors, quite a good chunk of those on his own. The rest just in joint ventures, and at that age, that's pretty extraordinary. So I'm very excited to get into his story and talk about how he's gone this far and what's next. Brian, welcome to the show, brother.
Thanks, Rod. Longtime listener. Great to be actually on here talking with you.
Well, thank you. Thank you. So, take us back, my friend. I mean, you're 29 years old. Good Lord. I've got socks that have probably a decade and a half on you. So, it's a real treat to have someone your age at your level of success on the show. So I'm very excited to get into this. So take us back and give us a little bit of the chronology, why real estate, when you got started, so on and so forth.
Yeah, absolutely. So I went to school for economics. I got a job in sales right out of school, commission-based sales. I thought I wanted to be a stockbroker for a long time, but ended up in sales. Put my head to the grindstone for 3 years there with the company. And I started making pretty good income. And I wanted to do something with that income, like, a lot of your listeners. And I was looking at either the stock market or real estate. I tried my hand in the stock market. I bought GoPro at $35 and watched it go to $5. And wow. That was my quick lesson with the stock market. I have zero control over that. So, the other side of the coin was real estate. And I started getting involved in real estate, looking at single family properties in my area, in my backyard. I set up a search for anything under $100,000, and I got one finally under contract after making about 20, 30 offers. Got it rented out. Mortgage was $500. I rented it out for $950. No sweat to me. Had it rented out pretty quickly. But as soon as I had that rented out, I did the math, and it was going to take me so long to get where I wanted to be with if I kept that process up. And everything I listened, on your show and everything I read about, everyone talks about how they graduated from single family homes to commercial real estate. They all said, you asked them at the end of the show, what's one thing you would have done differently? And they would have said, I would have got started earlier. I would have made the switch earlier. I wish I wouldn't have had that. So that was always in the back of my mind, ready to make that switch and jump. So, just about as soon as I had that rented out, I went on the hunt for multifamily properties. I found a 12 unit property on market. That was my first deal about 1 year and 3 months after that single family home. And that was at the end of 2017. And here we are 2021 with now I got 425 doors, 54 of them I own 100% of. So I've just been going after multifamily properties any way I can, whether that's seller financing, joint venturing. I knew that was a vehicle. I picked that niche of multifamily, and that's what I went after.
Nice. Yeah, it's funny. I invested 20 grand in the stock market, lost every freaking penny. And now I'm just impressed that you got the memo on the single family versus multifamily early on. It took me 2,000 freaking houses to get that memo. So I'm impressed, brother. And I appreciate you mentioning that question, because I asked that question by design, and you've just now validated why I asked that question, which is, what would you do if you knew what you knew now? And it's always go bigger, faster, and get into multi and all that. So I'm really glad that it's really kind of refreshing to hear an example of success as it relates to that, what I was hoping would happen with that question, because I try to ask it on every interview. So that's awesome. Thank you for that gift. That's actually a gift to me. So Brian, let's talk about some of these deals that you've put together, because the fact that you've done all of this, I mean, almost, 500 doors, 425 doors as in a JV capacity. And then you've said you've done some seller financing. Let's drill down on some of those. So let's talk about how you found them. So let's start there. How did you find the deals? And then let's talk about some of the structure that you put together and your mindset around putting these things together.
Yeah. So it started with MLS. So it's always kind of evolving. Now I have great relationships with commercial brokers and everything like that. But it was on the MLS. I just set up a notification on my Realtor.com app. Set up a notification for any multifamily listings to notify me, and I actually used the broker that sold me my my house that I live in. Before I actually knew about commercial brokers and everything. So I just knew I wanted multifamily. So I set up that notification, and that first one, it was on market. I found it. The structure was actually, I got a personal note from a family member. And as soon as I convinced them that it was a good deal, they were used to single family homes and actually owning stuff debt free. Told them about the power of leverage and showed them all the worst case scenarios, best case scenarios. And as soon as I had convinced them, the deal had fell off the market as it was under contract. But I stayed in touch with actually the listing broker and checked out their website and everything. And about a week later, the listing came up on their website, and it wasn't on the MLS again, but it was on their website. I reached out. He said, "Yeah, it just fell off contract today." So I was, I had already had the commitment from the family member for the personal notes. I'll meet you over at the property today. Let's get it under contract. And we did that. So, and now it's evolved to commercial brokers, like I talked about. But
let me stop you if you don't mind. Let me stop you. I want you to go back there, but I want to circle back to something you just said, just because it's so important, guys. And I hear this all the time. In fact, in larger deals as well. You guys know I have my mastermind, the multifamily boardroom. It's like 13, 14 billion in assets in there. And I hear this all the time, and from panelists at my boot camp, where, if you lose out on the sale, if you're in the number 2 or number 3 spot, circle back with that broker, because so many deals fall through. And so I just want to hammer that home, how big a deal that is, because just because you lost out on the first time, I can't tell you how often I hear this, that if you stay in touch with that broker, you'll very, very often, I mean, a bigger percentage than you might think, you could get right back in the driver's seat. So that's number 1. But number 2, I want to mention to you, because before we started recording, you brought up Kevin Bupp, and he's a good friend of mine, and he's in mobile home parks, got the largest mobile home park podcast on the planet. In fact, when he started his podcast, he asked me to do it with him. And I'm like, no way, man. I don't want to sit and talk, because back then there wasn't any video. It was just auditory. And I'm like, no, I'm not going to do that. And of course he killed it. And then finally I did it. But the reason I bring that up is you talked about having an alert in realtor.com. And that's one of the ninja tricks in this business, is to have your finger on the pulse of what's happening in the residential MLS, because those brokers haven't got a freaking clue what to do with multifamily. And so, and the reason that triggered my memory is I spoke at one of Kevin's seminars. He was teaching how to buy mobile home parks, and I think he's doing it again now. But I spoke at one of his seminars in Orlando, and we went and did a bus tour of this $2 million mobile home park that he found in the MLS. Okay. So that's kind of the example I use. So sorry to interrupt, but I just wanted to hammer a couple of those points home, Brian, because that's really profound. So
yeah, no, that exactly. I mean, I told you I had a one-on-one call with him, and one of the things he told me was sell my single family home and listen to your content, because you are so narrowed in on the, he's mobile home park, commercial real estate, but your apartment investing, you've obviously got the mindset stuff now, which I love as well. Mm-hmm. But the apartment investing is your main.
Yeah, he's one of my best friends. He's a super guy, and a shout out to him, because he's literally raised hundreds of thousands of dollars for my Tiny Hands Foundation, where we feed families for the holidays, kids for the holidays. We're over 100,000 kids served now, and tens of thousands of backpacks filled with school supplies, and thousands of teddy bears for local police departments, for officers to put in their vehicles if they encounter a child and that's been traumatized. And it's been one of my greatest gifts in life. And if, by the way, guys, just a plug, I hardly ever do this, but I'm going to do it since I brought it up. It's tinyhandsfoundation.org. every dime goes to the food and the stuff, because I cover all the operational expenses and then some. So if you want to donate, it's $22 to feed a family, tinyhandsfoundation.org. So I'll put in a little plug for that. But anyway, I interrupted you. Please continue with the brokers now, because I just wanted to hammer home those points before we
like you said, that's a ninja tool. And I think for me, it was just go after multifamily any and all ways you can. So that was one way. Another way was my wife drove my car around, and I would write down the addresses to distressed apartment complexes in our area. So
driving for dollars. Wow. Yeah. Wow. Love it. I mean, people do that in the single family space, but they don't do it in the multifamily. It's crazy. And there you go. I'm so glad that you're validating some of these things that I talk about in the boot camp, because, people like, does that really work? Well, you're a shining example that it does work. And few people do it in the multifamily. It's the craziest thing ever. So love it. So you found, and you'd research the owners, and then you'd contact them and see if they want to sell. Yeah. Love it.
Yeah. So that was another way. I would write down the addresses, find up the owner's information on the county assessor's website. I would actually, I'd have her pull over, and I would take a quick picture of the apartment, and I would send a letter to them with a picture of the apartment on the letter and everything, just telling them, hey, I'm buying value add apartments in this area, would love, congrats on your success. I congratulate them too, because obviously they made the first step. And so I found a seller financing deal that way, 20 unit.
Wow. Was it an elderly seller or just a normal, not elderly?
Maybe, elderly, 50 years old. What's elderly?
Oh, 50. No. But buddy, I'm 60. Okay. That's not elderly. 50 is a kid. Yeah. But okay. Well, one of the strategies that I talk about is mailing people that have owned 20 plus years, because you'll get elderly sellers, but no, that's fine. And they're the best ever for seller financing, because they just want cash flow, and they're not going to take their money and put it in another high risk investment. That's why I asked. But fantastic. So let's talk about that deal, that 20 unit. So did you propose seller financing? Talk about how it came together.
Yeah. I mean, that was my strategy with it when I was driving for dollars. That was my strategy, was to do seller financing. I wasn't confident in how much money I could raise from my family at the time. So, my main focus was, you're not going to have to pay commission, and I can keep you some cash flow, and you're not going to have to pay a big tax income, as great if we defer some of that cost. So that was my pitch to him. And I told them, with it just being me in the deal, I can usually be a little bit higher on the price. I don't have to pay other investors on it. So it's just me, and I'm young, and I'm okay riding it out. So that's how we did it. And
fantastic. Now, did it have a mortgage that you assumed or wrapped, or talk a little? Let's go a little deeper. Or was it free and clear?
So he owned it free and clear.
Okay.
He financed 25% of it, and I told him I would give him 6% interest, and I told him I would give him $500 a month. I would pay him $500 a month, and I found a bank that would finance the rest of it. They actually
no kidding.
Yeah,
no kidding. Wow.
They finance the rest, and banks like that, local banks are your best bet for that. So I just got a list of about 20 banks in my area that only had 1 to 3 locations. And then I wrote them all down and just called them and, hey, can I talk to your commercial lending department? From there, do you guys finance apartment complexes? Here's what I'm looking at doing. And, most local banks, if you're in a pretty good market, they like financing apartment complex. When they hear you're buying apartment complexes, their ears perk up, and they can be pretty flexible with terms. So
fantastic.
Yeah.
Well, I'm going to tell you, and that's the thing, guys. You have much better luck with those smaller regional banks. Like Brian said, 1 to 3 locations, because they have a lot more flexibility. They've got a small loan committee, and I would encourage you actually to build relationships in the markets that you're in with those bankers, because if the market turns and there are bank owned properties coming online, you'll be in the catbird seat to get some of those. If you listen to some of my podcast episodes, some of these guys that bought in 9, 10, and 11, they had bank finance deals on bank REO properties because of those relationships. But you're another great example for building relationships with these smaller banks because you basically got into that thing for really nothing down. I mean, or little or nothing down, right?
Exactly. Yeah.
Yeah,
Just
fantastic.
a little bit of closing costs and that was it. And, that helped me even more with my confidence. I had a 12 unit. Now I have this 20 unit.
Mm-hmm.
I was build a relationship with a lender and title company. So it just definitely kept
Now, are these in
propelling.
your backyard?
Yeah. Everything that I've done so far is in my backyard. Furthest one away from me is about 2 hours, but most of my portfolio is about 30 minutes away from me.
So are you managing it yourself?
No, that's why I got into apartment complexes. I did not, that single family home, I managed myself. There's nothing wrong with it, but I knew if I continued that something would eventually happen. So, that's one of the big reasons why I got into apartment complexes. Cause you're buying the business and professional property management is built into that system. So, I have two different property managers depending on what area of the market it is. But yeah, I use professional property management.
Fantastic. So talk about how you asset manage those managers. What sorts of things do you keep an eye on? How often do you speak to them? How do you communicate with them? Speak to that a little bit. Speak about that relationship.
Yeah, it's a good relationship. You want to have trust there, so I mean, it starts with vetting them in the beginning. That's the first thing you need to do is what kind of assets are they currently managing? If you're buying C-class apartments and they're managing A-class stuff, it's going to be a totally different approach, So same thing with the smaller ones. I heard it on one of your podcasts, but someone made a mistake of hiring a single family property manager they had a great track record. All their reviews were great, but they were all doing single families, and it was just a completely different model when they did apartment complexes. So I made sure they managed the type of assets that I was going after, which was C class value add apartment complexes,
right.
And had a portfolio close to that area.
Similar size as well. Yes, like you just said. Yeah, if you get somebody that manages single family and you give them a 20 unit, they're going to crash and burn. If you give somebody that manages 100 unit a 20 unit, they're going to crash and burn. You give an A class manager a C class. I mean, I have proof of that with an asset we bought in Louisiana. With a partner, just a train wreck. His management company was a train wreck because they had no clue how to manage a C asset. So, okay, that's really good. And so you vet them. Now let's talk about the communication with them and the ongoing accountability. How does that work? How do you structure that?
Yeah. So I ask for weekly report. Most are trained to do monthly reports. I try to ask for weekly reports, to try to keep a pulse on the vacancies and expense, anything out of the ordinary. It started with monthly reports, but then I switched to weekly reports, just to get a pulse on what's going on, if we have any expenses. I have it set, at my portfolio now, I'm asset managing myself. So I have anything over $200, I'm asking for approval on. So if there's something funky that I see, I might ask for that second and third quote, even if it's a regular vendor of ours. Sometimes they get comfortable. If they keep getting more business with you, you might notice that they're upping the prices just because they think it's a for sure.
It's called vendor creep. Yep. It absolutely happens. And so you are utilizing their maintenance and contractor infrastructure. Then you don't have your own maintenance guy that runs around all these.
Right. Yeah. So for minor stuff, because I'm in my backyard, I have a couple good construction contacts. So like gut rehabs. I put in a new parking lot on one. I actually set that up myself. I didn't use my property management company. I'm here, like I said, 30 minutes to an hour from my assets. So I'm fine setting up the construct. If it's a big job, I will go ahead and vet that myself. So I know people in town. So any construction, I handle myself.
Got it. Okay. So let me ask you this. What suggestions would you have for a listener that, wants to do this business, hasn't pulled the trigger yet? Well, let me ask it a different way. Did you have any fear getting into this? Did you have any, or are you just a go get it kind of guy that didn't have any fear? But be honest. Let me go back and think about right when you started. Anything come to mind?
I mean, I think even the single family just gave me a little bit of confidence, but I didn't necessarily need that. I felt pretty good after that. I got this deal under, it was 100% me. I felt good about it.
Well, how about any hiccups in the journey here? Talk about any like, oh crap, what am I going to do now moments? Do you have any of those to share?
Um, and back to I've as far as like educating yourself, you'll feel a lot more comfortable if you can educate. You're not, obviously never going to learn it all or know it at all. I'm still learning every day, and that's part of it. But I think having good communication and on that point, and I felt pretty just always keep moving forward. But
Okay.
I guess setbacks. My first 12 unit, I put in a like $40,000 parking lot. I probably didn't need to do that. It was it's a 12 unit complex, and I did 12-inch graded concrete, and
Oh, wow.
I let
You
some
didn't
parking.
probably not need to do that. You definitely did not need to do that. Now, I will tell you guys, when we do a CapEx, well, that's a seminar. It's okay. You learn. It could have been a lot more money. But when we do CapEx, we try to see a repayment of that money maximum 3 years. And so unless you got a rent bump that equated to enough income to get you that 40 grand back, then, it might've been a little overkill, but that's okay. Still it is what it is. That's how you learn. Now let's talk about, so suggestions. Talk about suggestions for people that are thinking about this business, haven't pulled the trigger yet. Anything come to mind when I ask that question?
Yeah, I mean, educate yourself. You, like as much as you can. Listen to every find out what do you want to do. Are you going after medium size or big apartments or C class or A class? Figure out exactly what you want and just zone in on it. You can look up go to Rod Khleif apartment comp. You have the mindset stuff, and then you talk about some other asset classes. But if you zone in on what you want and search for that, there's so much, information about that. So
a lot of content out there. Yeah. Yeah.
So figure out exactly what you want and zone in on that, and then know that you're never going to know it all. It's okay to fumble, leverage other team members. You start talking to a lender. Now, if you talk to a property manager, tell them that you talked to the other lender. Same thing and vice versa. So once you start having these conversations, you can actually leverage each part of that teamwork. So yeah, I'm talking to United Bank, or I'm talking to Legacy Bank when you're talking to the property manager, and same thing with the property manager. Leverage.
You name drop a little bit, gives you a little more credibility and confidence, and they take you a little more seriously. No, I get it. That's absolutely smart. Okay. And so I know you're going to get into syndication now. Because you maxed out the JV. You mentioned this before we started recording. What's the game plan for that? Is it just you? Do you have a partner? What's the game plan there?
Just me, and my wife is my marketing coordinator. So she has a marketing background, so she's putting out content and everything for me.
Fantastic.
That's a big game, because I've built this portfolio, I've been able to retire her. So she does it full time now with the marketing aspect, but yeah, just me and her. So, now I've got this track record of these units where I've built multifamily. And like you said, I've started to get capped out of that family money. So now it's just networking and letting more people know what I'm doing. That's something I didn't do in the beginning. I was super focused on the deals and talking to commercial brokers and talking to lenders and everything. And that served me great for 3 years. But now I'm, about capped out of the friends and family money. Maybe not friends, but family money. And I'm starting to get more deals from these commercial brokers. So it's really pushing the marketing piece is the game plan.
So let me ask you this. How's she doing that? How is she helping you create reach? Because that's a really important piece of this business, is creating reach. I mean, obviously, there's podcasts, there's Facebook groups, there's LinkedIn, there's Instagram, there's Clubhouse now. There's all these different places. How is she going about it for you?
So we really focused on picking two outlets. If you spread yourself too thin, Twitter, Instagram, LinkedIn, there's so many, do one or two that you're comfortable with. So that was, for us, was Facebook and Instagram. Just to start, she created a home base for that. She also created a website for us, hired a video guy. One of her friends does videos, and he took a video of me that we put on the website.
Can I give you some feedback?
Yeah.
Okay. I would encourage you to put educational content out there if you're not already. Okay. So it's not about sales content. It's about adding value. And this goes to everybody listening. So, if you're going to create reach, there are two secrets to doing it. And you're absolutely right, Brian. It doesn't matter. Pick the vehicle you like the most. If you like video, then do video, YouTube, Facebook, whatever. If you like to write, do a blog on your website. If you like to talk, do a podcast, whatever it is, the medium that you enjoy the most, because you're going to be the best at it. But then there are two pieces that you have to do. One, you have to add value, and two, you have to be consistent. Okay. Like you said, you spoke with Kevin Bupp. Was that one of those free 30-minute phone calls?
Yeah.
Yeah. Right?
Yep.
Yes.
Yes. Yeah.
Yes. Okay. So I did the same thing with my podcast, and I got the idea from him, and it was just adding value, right? And look at the incredible value that he added to you, and that's why his podcast was a success. It's why one of the reasons my podcast has been such a success is that focus on adding value. So that would be my 2 cents. Now, maybe you're already doing that. Forgive me if you are, but I wanted to share that more for the listeners as well.
Yeah, that's huge. That's starting to get more consistent. 2 weeks ago, we just started the YouTube channel, and that's going to be the focus on the YouTube channel. Why apartment invest? The main focus is why apartment investing is better than single family homes, and why it's a more passive vehicle. So just kind of educating people. I think a lot of people know that real estate's such a powerful wealth builder and everything. So I think just educating them on the apartment investing side of it, and like you said, the education and providing value. So I definitely appreciate that input.
No, for sure. So any aha, I mean, you kind of talked about it. One of the questions I like to ask, if you had any aha moments, I think it was that realization that you weren't going to make it with single family, that you had to, to get scale, you were going to do multifamily. Anything else come to mind with that question?
Yeah, I think that's a great question. I mean, there's constantly aha. I think there's aha moment. Hopefully you have aha moments like every week, you're like moving forward, but big ones, the big one, single family to apartment investing, that was a huge aha moment. And I think the aha moment now is the marketing piece. Like you're talking about being consistent with that and providing value to there's probably a lot of people in your network that are interested in it, but maybe not know about it. So
right. And yeah, just to hammer that home a little further. I mean, don't even get started if you're not committed to doing it for 2 years and doing it, either weekly or ideally weekly. Otherwise, don't even bother, because you'll get lost in the noise. I don't know how many million podcasts there are now, but I mean, it's very easy, and social is like that. There's a lot of noise, but the beautiful thing is you don't have to have this huge base. If you've got a few hundred people that are listening to you, that are getting value from you, you're building that relationship, and it's just extraordinary how well it works. So let me ask you this: do you set any time aside to think about your vision, to think about where you want to go? Do you have any sort of rituals that you do that you think have contributed to your success?
Yeah. I mean, I wake up every morning at 4 a.m., just before 4 a.m. Is my alarm set right now. So I get up in the morning, I read 10 pages, and then I journal a little bit. I'll create a power list of everything that I need to get done that day. 5 bullet points of maybe 3 are people that I need to reach out to. 2 are people that I need to do. And then right as I'm doing that, I'll go to the gym 5 a.m. From 5 a.m. to 6 a.m. I get my workout done for the day. I do that first thing in the morning, because that's health is wealth. I mean, health is huge for me, and I feel good after that. And at the end of the day, I'll go back through that list. Anything that I didn't do, I need to add that on to the next day. I think having goals is huge, and creating lists for yourself on what you need to do and targets.
Love it. I mean, that's kind of almost like the Miracle Morning. I had Hal Elrod on the show. That sounds like the Miracle Morning. Is that where you got that from, or you heard it talked about?
I mean, I think you talk about on your show, like so many successful people are waking up early. I don't know how many successful people are not waking up. I mean, to each their own, but a lot are waking up early and getting their day started early. So yeah, Hal talks about it. I know he does a brushing your teeth and cold shower and everything like that. So I think you can tweak it to your own preference, but yeah. And then like podcasting is huge. Now you've got the mindset too. So that's big for me. in the mornings and the afternoons, you're having a bad day. And then you hear someone on your podcast who like had a hardship, but now they're at 1,000 units, or now they're,
right,
doing these things. So it's pretty motivational to like keep pushing you forward.
Nice. So although, again, I've got socks older than you, I still want to ask you the question. If you could go back and change anything, is there anything with what you know now that you might do differently?
I try not to have many regrets. I think that's probably what helped move me forward, is not having like worst case scenario, I get told no, so I think that's part of the big reason why I've had if you want to call it success so far. So I think we speak about it, but marketing, I would have done that more, like you talked about, putting, educating people along the way as what I was doing, so maybe letting people know what I was doing and why I was doing it. If I would have started,
you'd be a little further ahead, maybe. Yeah.
So okay. I think that would be the one thing.
So let me ask you this: what this business, this multifamily game, really is a team sport. So I'm thinking you're probably going to bring someone else in, just so you know. Okay, I'm just going to share that with you. I would guess that's going to happen for you, if nothing else, just because you go after a large deal, you're going to need other general partners for the liquidity and the net worth requirement. Even though you've got significant of that's going significantly for you, it's probably not going to be enough for a larger deal. So, and I talk about this a lot on the podcast, where you've got your unique skill set or superpower that you bring to a team. How a lot of teams are an analytical person with an outgoing person, and then maybe an operations person to handle the asset management. What do you think is your superpower as it relates to this business, based on what I just said, your unique skill set that you're really the best at? Is it the communication? Is it the analytics? Is it, the operations? What do you think is the top for you?
I think it's a communication and tenacity. So, if I say something, I'm going to do, I think that's what helped me along the way. If I say something, I'm going to do it, and I'm not going to waste time either. If I see an email in my inbox, I'm replying within a minute, like I'm okay, staring at my phone all day. Eventually I won't be doing that, but right now I'm young and I don't have a lot of responsibilities at my age. So I'm okay to, respond right away. Whether I have an answer or not, I'm going to let the other person know that I'm working on it. And whether I've done any deals with them or not, I treat everyone the same. So,
do you have kids yet?
No kids yet.
Yeah. Okay, good. Really pleased to hear that, based on what you just said prior to that. Good.
Yeah.
So last question, if you could give one piece of advice to my listeners, especially the ones that haven't taken action yet, the ones that know they want more for their family. Again, they might be sitting there in fear of failure, fear of rejection, whatever the fear is, limiting beliefs. Maybe they're comfortable. What advice would you give them?
The best case scenario is going to outweigh that worst case scenario 100-fold. Just do it. Just take action. The analysis by paralysis can really handcuff you. You're not going to always have the right answer. You're not going to have, there isn't always one right answer either. There's multiple ways to do it. So I think just take that action, take the first step, make the first call.
That's fantastic advice, especially that little piece you put on the end about there's always more than one way. And you want to look at things like that, because a lot of what we do is problem solving, and the most successful people in this business are the problem solvers, that are the ones that can look at it from different angles to solve, whatever hair is on that deal. So no, that's really good. Well, listen, this has been a real treat for me, Brian. I'm really impressed with you, buddy, and just keep up the good work. I know you're going to be back on the show with thousands of doors in no time. So great to have you on, my friend.
It's an honor, Rod.
Thank you.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.